All right. Thank you all for being here. Especially in this, what I would call the trifecta of factors, the three that I think are, today's a Saturday, on a day that's almost going to be 80 today, and on a fall day with such beautiful colors. So I have only two theories to see why we have such a great turnout. Either you have nothing better to do and need to get a life, or you are so dedicated and hardcore fans of the CEM and to learn all about what's going on in India, and I would place my bet on the latter. So thank you all for being here. My name is Ganesh Krishnamurthy, and I am a faculty member in the accounting group in the Damore McKim School. Next year will be my 25th year at the Damore McKim School. So great to be here, and without any further ado, I want to, there's Anup. Anup Kuruvilla has actually already joined us and is going to be illuminating us with his wisdom in this session. And what I want to do first is take a few minutes to give you a brief introduction of his background, and then we'll get started with this session in terms of what we would like to discuss and get out of Anup's wisdom. So Anup is the co-founder and the CEO of OneCrowd, which has been in existence for about 8 years. Prior to that, this is not his first rodeo into the banking and the finance world. He's had 30 years of experience prior to that in the banking and financial services industries with some of the biggest financial services firms out there, Chase, Citi, ABN AMRO, and a few others. He also has his experiences spanned various parts of the world. His first 10 years he spent in India, and then the next 20, I believe, he spent in the Far East, Singapore, Jakarta, and Hong Kong. So he brings with him a world of experience, and that I'm sure he has put to work in his current venture. And he's a proud alum of Loyola College in Chennai, a very prestigious institution, I might add, and also has an MBA from XLRI in Jamshedpur, another prestigious institution. And this is the most favorite of all of his credentials. And I think Vivek Sharma ji here would agree with me that his most prized credential that he has is a chartered accountant from the Institute of Chartered Accountants of India, which I also am a proud member of. So with that introduction, what I would like to do is to hand the mic over to him, maybe to give us some sense of the background of OneCrowd and how it came about and how he got involved in it, and what you guys are up to these days. So again, I want to welcome Anup, and thanks for being here. It's almost your dinner time, so we'll try to keep on time. So if you have not had dinner, we don't want to stay between you and dinner. So with that, I will pass the mic over to you.
Thank you very much, Ganesh. And let me take this opportunity also of thanking Ravi and Vivek to give us this opportunity to be presenting to all of you at Northeastern University on this summit. It's a very interesting topic, and I wish you all the very best, and I hope you will find this session also very interesting. OneCrowd is a SEBI-approved alternative investment fund. SEBI is our market regulator, the equivalent of your SEC. We specialize in seed, pre-Series A, and Series A opportunities, specifically focused on Indian early-stage companies. We are sector agnostic. We have investments in deep tech, in life sciences, in FMCG companies, enterprise SaaS, And we've made a number of impact investments in companies varying from clean tech to rural healthcare and to companies in doing affordable private schools for the less privileged and so on. We began a journey 7, 8 years ago, and we are now a 15-person team in Mumbai and Bangalore. We make initial seed investments of about $200,000 each in the companies which we have chosen. And then as these companies begin to scale, we obviously begin to put in larger amounts of capital into them. We have a very unique opt-in structure, which is not common amongst many funds, where our individual LPs determine whether they want to pursue a particular investment or not. If they do, the minimum investment which they would be making into that venture through this fund could be as less as 10,000 US. And these LPs give us a commitment, however, that over a 5-year period, they will put in at least $150,000 through us into other early stage opportunities. We have, over the years, invested in over 50 companies and have helped more than 150 entrepreneurs to realize their dreams and have created over 5,000 jobs in the Indian system. For us in OneCrowd, we don't consider this as a job, but a mission to be helping entrepreneurs to achieve their objectives.
Thank you, Anup, for that excellent introduction. And I think given everything that you're doing in this space, I'm pretty sure you have a very good pulse on what is going on with funding for early stage companies. And so what I'd like for you to please do next is to see if we can get your views on what the current state of funding is for early stage companies in India. And we hear a lot about this funding winter, especially with rising interest rates all over the world, including India. And so, if you want to share with us, what's the pulse there with respect to the funding status for early stage companies?
To answer that question, Ganesh, I think I need to give the audience a little bit of background of the Indian VC market, which can be categorized into two types of VCs, the Indian VCs and the offshore VCs. And when I say Indian VC, what I mean is who are the LPs behind these VCs? An Indian VC is one where the LPs are largely Indian or NRIs. And an offshore VC, I would define one as where the LPs are all offshore, foreigners. Now, the Indian VCs concentrate on seed and Series A, a little bit of Series B. And the foreign VCs, using my definition, they come largely into Series C and beyond, a little bit of Series B. There's a reason for this. Capital has always been scarce in India, especially patient capital. So LP, and this is a very nascent business. Early Indian investors have always gone into traditional areas like gold and real estate. A little bit has gone into the stock market. But as stock market valuations are going higher and higher, people are now beginning to look into alternative asset classes. But by and large, it's still a bigger pool of capital which we have compared to what is there in the offshore markets. So because of that, we are concentrating really on this area. This is our specialty. Offshore VCs they don't have the capacity to be analyzing the thousands of companies which we are looking at this stage. They don't have the ability to do so. They're sitting offshore, and it's not only in this stage, you're not only analyzing them, you're also nurturing them. You have to be with these companies for the next 7, 8 years. It's just not possible to do that from offshore. You can do that also only from onshore. So for these reasons, when the Indian VCs have always had a capital frugal market. There's no funding winter. It's always been difficult. Where that funding winter has picked up is coming more on the foreign VC side, and also one category of foreign VCs, which happened probably in the 20s and 2021 era when there was a lot of froth which came into the market, and then a certain amount and I'm not here to criticize any particular VC style. That's each one has. I mean, these are big boys, and they knew what they were doing. But they took a bet saying that they wanted to get their companies in India to grow at all costs. Forget the bottom line, just grow, dominate the market, and so on and so forth. And that there will be capital available for them, because that was an era of easy capital in the offshore markets anyway. Now, obviously, that has begun to, for obvious reasons, has begun to freeze. But it's only that particular segment which has been affected, and that's a very small segment. Maybe, I mean, there are about perhaps 200 companies in that segment which are being affected. But there are, I mean, there are thousands of companies in India which have not been affected by that funding winter. Because that's only one particular type of foreign VCs which have been frozen. There are a number of other very good foreign VCs around which have got a lot of gunpowder, which haven't used their capital, and they're now getting into companies which are the type of companies which we have been focusing on. Remember, India's strength has been its ability to use capital efficiently. That's been, whatever you can criticize us, capital efficiency utilization is, we are perfect in it. I mean, we send a rocket to the moon at a price which is probably lower than what Hollywood makes to make a movie on that. So that's our strength, right? So there was some bizarre movements which happened with this peculiar set of VCs which came in to the Indian market to distort the picture in the 2021s. But that's an aberration. I think this funding winter is actually helping a number of our companies, because they're all the type of companies which the new set of the other foreign VCs which have got gunpowder are looking at.
Yeah, no, those are great insights. I mean, whenever we have, there is going to be some tightness in the market, capital markets. One thing it does is disciplines the market in diverting resources to the best projects. And so I suspect some of that is happening in India, like in many other capital markets. So where are you seeing the best opportunities now in terms of sectors? Our previous speaker, Kunal, I don't know if you heard him, he talked about a few sectors that he has invested in that have been very, very good. What is your sense of where capital is going at this stage and where the best opportunities exist?
That's a good question, Ganesh, and that's one which we are often asked as to what are the hot areas to be investing in. And I'd like to answer that question in another way, to give you a little bit of perspective. The investments which we are making in are long-term investments. When we make an investment, we are going to be in that company, especially it's coming at the seed level, we are going to be in that company for at least 7 to 10 years, if not longer. Because it takes about 4 to 5 years for a company to stabilize before they can from seed, before they can do a Series A, another 1 or 2 years before they do a Series B, and so on and so forth. By the time we get out, it will be at least 7 to 10 years. What I should really be asking myself is, what is the hot area when I'm trying to exit 10 years from now? Because what's the point of knowing what's a hot area today? That's irrelevant. And there's obviously no way I can answer that question. So I have tended to, we have tended to not follow, not go down that path as what is a hot area today. I mean, if you look at it, the hot areas 2 years ago was food technology or edtech. Those are obviously struggling today. Or today, what's a hot area? Sure, people talk about EVs and battery swapping, but it's all irrelevant, right? I'm not saying we won't invest in those areas, but I'm not saying either that we won't invest in an area which is not considered hot, which is, say, edtech today. Now, if we find a good opportunity there, we will invest in it, because I'm not looking at it today. I'm looking at it what's the situation 10 years from now, which I don't know what that situation is going to be in any case. So I think what we should only be focusing on at this stage, and that's what we do, is focus on the quality of the founder. I think I did attend Kunal's session. It was a brilliant session. I enjoyed it very much, by the way. But it was focus on the quality of the founder. What is the market size? How sustainable is it? In other words, how fast can you get to profitability over there? I mean, because that's what we are good at. And how strong are the moats? How can you prevent others from coming in? You don't want to get into a Me Too type of thing where you're competing only on price and so on and so forth. So if you can get these 4-5 parameters broadly correct, I know these are motherhood statements, but if you can get those 5 parameters correct, that's what you should go on and not focus on a sector per se.
Yeah, no, those are certainly good words of wisdom, especially if you're in it for the long haul, which I think most sometimes investors are not. But you hit on something that I think Kunal also hit on, which I think all of us in this room can appreciate, which is that anytime you're talking about finance, and certainly I can speak to accounting as a profession, it's a people business. It's talent, talent, and talent. That's what counts. And it's the quality of the founders, the management team, and that team is coming through over and over again. So can you speak to the pool of talent and entrepreneurs that you are working with, that you see in India today? And what are some of the common traits and characteristics that you see in successful entrepreneurs, especially in the current market and circumstances that especially a hyper growth environment like India faces?
So entrepreneurship is a big word, and so let me try to define a question by trying to focus on what are VC fundable entrepreneurs. So focus on that narrow piece. And remember, this is also a very nascent ecosystem. There's a huge in terms of numbers, but everything in India is huge. By nascent, I mean the ecosystem, the startup ecosystem here is only 15 to 20 years, whereas in your markets, you're probably 50 to 60 years. So it's far more developed over there. So if you're asking me what are the common traits and backgrounds of our entrepreneurs, let me share with you, and I'll give you our experience. Now that may not be the gamut, but at least it'll give you some experience of what is happening as far as the investments which we have made. One thing is that out of our 50 odd investments, I'm happy to say that at least 10 of those investments are ones which have where the founders are ladies. Now, I don't have the statistics of what it would have been 10 years ago because we won't have been, we were not around 10 years ago. But I think the answer to then that time would have been close to zero. So that's one good thing. And I don't know what the answer will be 10 years from now, but I do think I'm quite sure that it will be certainly more than the current ratio. But so that's one good development which is happening. The second is the entrepreneurs which we are backing come from a few cities. And let me try to explain why. So, initially they all came, a large chunk came from Bangalore. Why? Because one, Bangalore has got, you'll be surprised to know, 150 engineering colleges. 150 engineering colleges in one city. So you can imagine the talent pool which is coming out. And that's where here all the big IT companies set up. Initially, I'm talking about 20, 30 years ago, Wipro, Infosys, TCS, Mindtree, and there were scores of other medium-sized companies. And then the GCCs, that is the global captives began to come here. These are the multinationals which are setting up their R&D facilities. Most of them, first stop they come is here in Bangalore. And then you had all the successful startups here, Flipkart and that type. So there was a huge, and they came here because all these engineers were here. The tech talent was here. That's why they came here. And of course, when that happens, what we have found is that good tech talent, after about 10 years in these large companies, they get an itch. It's time for them to move. And they're not afraid to fail. And that's when they begin to move into an entrepreneurship role. And that's created a virtuous cycle. And so the very vibrant ecosystem got built over here. You had a multicultural talent pool. So people from all over the country come into Bangalore today. And the VCs are here, the legal firms are here, they're established founders which are nurturing their mentors, which are taking on roles as mentors to nurture future entrepreneurs. There are lots of millionaires around because of the stock options which have happened. So all this has led to a very virtuous cycle. And that's why initially all these founders came out of Bangalore. They were tech founders from Bangalore. Then soon other cities began to catch up. Hyderabad is perhaps where all the new Gs, and it's also because of all the growth in Bangalore, traffic problems and all began. So people then began to look at other alternatives. Hyderabad is coming up very strongly. Pune, NCR region, Chennai. So if you can meet, these are where the entrepreneurs are coming in from. So if you can get all these, if you can get the ecosystem in place, And that's what is going to be very, very critical. Now, there are good other places which has got good engineering colleges, but they're not yet multicultural. I mean, if you take, I'm just talking about, say, Thiruvananthapuram, take Trivandrum, for example. There, there are not many non-Malayalis go there. So it's there's not enough talent pool there. They have the engineers, but not enough talent pool. It's not diverse enough. So if you can get these parameters in place, you will be able to say that on an average, I would say that the next set of entrepreneurs in India would be coming from these 5, 6 large cities which I mentioned, which have that cosmopolitan nature. They have a depth of, they have huge depth, and they are largely techies.
Yeah, no, those are great thoughts in terms of how the talent is shaping in India, and it's really very heartening to note that there are. Frankly, I'm very pleasantly surprised on the number of women entrepreneurs that you mentioned. So this is very heartening. So maybe briefly, if you can tell us if you want to add anything. We have a group of students here, a lot of budding entrepreneurs. So are there one or two main things that you would want to convey to them as to how they can become the next Anup or Kunal? You want to share?
Kunal is a very successful entrepreneur. Not only helping entrepreneurs. But having said that, no, I think this is a great time to come back to India. I'm puzzled as to why people stay outside, but anyway, each to his own. I think because the opportunities here are immense. I mean, you don't have to be a rocket scientist to understand this. But to become an entrepreneur, I would say that you have to do it carefully. Don't immediately, at least, again, I can share with you our views, and maybe I'm biased over here. But and I did hear Kunal's talk where he said, he would like to start something immediately. I think it's better for somebody to get into an industry or join in another startup and stay there for about 5 years at least. Learn the ropes over there. Don't start off immediately because you're going to be making mistakes. Better to make those mistakes on somebody else's money. But that's the way it is. We all learned that way. And again, second is, I think Kunal mentioned this, and I fully endorse it. Don't go alone. Spend that 5 years which you're thinking about, deciding who's going to be your founder, who's going to be a co-founder. You can get an idea. Ideas are a dime a dozen. You will find enough ideas. It's executing the ideas which is going to be difficult, and that's what you need to be focusing on. And but you need to have a very strong founder. The entrepreneurship is not up. There's going to be more downs than ups. The downs are tremendous, and don't underestimate them. You better have somebody who is watching your back constantly and who you can trust infinitely. I've seen enough cases where founder disputes have happened, which is very, very unpleasant. The other part which I would like to highlight especially to our tech founders, is that they always underestimate the importance of sales. They are tech guys, they're wizards, but they don't understand sales, and they don't understand that importance. You have to bring in a co-founder who's a sales guy. He's going to be completely different from you, from a tech guy, but you have to have him there, and he has to be there as a co-founder. Especially tech guys, they spend a lot of trouble. They're very focused on their product. And one point which you keep on telling them is, listen, in a place like Bangalore, a Nano is perhaps better than a Mercedes. Don't spend time making a Mercedes. Make a Nano and make it work, and go sell the damn Nano. And don't spend all your money in building a product which is focused on the sales. So I think that's the so if you're going to if you're going to form a team also, I would suggest to have 3 people there. One is a tech guy, one is a sales guy, and one is the face of the company. Call him CEO or whatever you want to do, but he's the guy who's managing all the noise, facing off against investors, doing all the other type of work. And there are 3 different skill sets, but you need to have all 3 of them, and don't underestimate any one of them.
And I would want to add one more: accountant. So, can never have too many of those. On that note, thank you for those really wise pieces of advice. I'd like to now call on the audience. I know there's a lot of wisdom here in the room, so could you please, you're welcome to ask questions. And are there any questions we can? Yes. back there.
Hello, everyone. Sir, as you said that you would be helping young entrepreneurs to come into the picture and work. I'm planning to launch a startup in coming year, and how can I contact you maybe or your team to get and guidance? I'm looking to get the investors for my startup. So how can I contact you?
May I know your name, ma'am?
My name is Jaswinder Kaur.
Hi, Jaswinder. Jaswinder, I'm sure that Ganesh will be able to connect you to me later.
Okay.
Very good. Do we have other questions? I think we have one over here. Back here. Would you please raise your hand so they can, the person with the mic can see you?
Yeah. Hello, Mr. Anup. This is Pranav. A simple question is that, we've heard you talk about the traits that most of the successful founders have. What are the traits that, or what's that trend you find in most of the unsuccessful companies or unsuccessful founders who try, start a business and then fail, somewhere in the middle, or fail at the very end?
It's a good question. I don't know how to answer that because there are so many startups. In India, if you look at the statistics, last year 26,000 startups started, and if you see that type of startups, I mean that's. I'll give an example which Ganesh and Vivek will know. We are all chartered accountants. In the chartered accountancy business, they say that the pass rate is 3%, and so it's a difficult step. Now, it's actually not so because 90% in those days, 90% of guys who went in for chartered accountancy were people who, were doing it as a time pass. They couldn't get into engineering or something, and they couldn't, and they were waiting to get married or all sorts of things. So the whole bulk of guys who went in there deserved to fail. And so that's why but the guys who were serious enough about it would pass. So having said that, the same story is on the startup guys. There is a lot of guys who start up these things, who are creating startups, they have got no chance in heaven to do it because for various reasons. Now let's come to the good quality ones and then answer your question there. I think there amongst the good quality startups, why does failure happen? It's largely driven by inability to get your sales up. I think that's the biggest challenge, which is that people underestimate that. So that's one. Two is that it's sometimes better to not come from a wealthy family. I found that because when you come from as I said, in this business, there are more downs than ups. If you're coming from a wealthy family and you see a down, you're going to jump into something else. So better to get into, and that's what I see. Because this is a tough business, so you have to be determined to make it work and go through the down and go through the down periods with the economy. The third element, I think, is that you need to be aware of founder fatigue. I've seen that happening, where companies, good founders, they struggle after 7-8 years of not being able to make it. They get tired, and they then decide to go back into industry. So, but I think by and large, it's all a matter of hard work. You need to have good luck. You need to be able to have all the three parts which I just mentioned to you. Good tech, good sales, good investor connects. If you can get those three, I think that would be the best. I don't know if I've been able to answer your question adequately, Pranav.
Okay, I think we are, I thought the clock said 4.5 and then suddenly says 1 minute. So I think we probably need to wrap up because we have the next session coming up. I do want to thank all of you for being here on, especially in a gorgeous day like this. It really shows dedication and how much you value what you're getting here. And I hope this session was a really great example of that. So I want to thank you. And very importantly, I want to thank Anup for being here. It's pretty late in Bangalore, so thank you so much for joining us today and sharing your thoughts. And with that, I will sign off, and I will invite Ashish to come and go on to the next session. I think what do we have? We have 3 or 4 minutes, okay. So if you want to grab a drink or a cup of coffee or whatever, please do so, but we need to be back in about a couple of minutes or so. Thank you again.